The worst financial crisis in history is inevitable. During the dot-com bubble and the 2008 collapse, Michael Burry made hundreds of millions of dollars, and he now thinks he can earn billions in the upcoming months. Michael Burry is a hedge fund manager who won fame for betting against the US housing market before the 2008 financial crisis. Michael's reported holdings are rather clear if you look up his portfolio online. Burry owns options contracts for about $3 million and 11 stocks worth a total of $165 million. Burry has approximately $168 million in total public holdings. But according to his Form ADV, he actually owns $291 million. So where did Burry put the $123 million left over? Let's find out. Exactly how Burry just staked big on the upcoming market crisis will be explained in this video. Scion Asset Management, a hedge fund that Michael Burry oversees, must submit 13F reports each quarter in order to disclose its assets. The Securities and Exchange Commission's 13F filing is a document that lists institutional stocks and options ownership. Each institutional fund manager who manages assets worth at least $100 million is required to submit a 13F filing. Michael Burry manages roughly $300 million, so he must complete a 13F filing by law. Burry has chosen stocks that will profit as inflation picks up over the coming few years in accordance with his inflation thesis. Input costs are a significant component of inflation. Costs incurred during the production of a good or service are known as input costs. This is due to the fact that higher pricing will result in higher input costs and as a result, lower profit margins. In periods of inflation, Michael Burry is fully aware of the importance of input costs. He owns 11 stocks worth a total of $164.8 million. Travel, technology, healthcare, and value are the four areas into which these holdings might be divided. The two travel businesses that Burry owns stand to gain a lot from rising oil costs. Burry has 6 options for where to put the money that is left. He might have cash on hand, but on foreign exchange markets, buy farmlands, short stocks, and cryptocurrencies, or bet against bonds. These options are speculated since they do not need to be disclosed to the public through SEC filings. We can eliminate out cash because Burry predicts that it will depreciate at an alarming rate. Fiat currencies, often known as government-backed currencies, are traded on the Forex exchange, a global market. Trading foreign exchange involves placing bets on certain fiat currencies that will perform better than others. By trading their dollars for yuan, investors could wager that the yuan will do better than the dollar. If the value of the yuan increases, this would enable the investors to convert their yuan into dollars. The next choice for Burry is to buy agricultural lands or commodities like gold or silver. We are aware that agricultural commodities have historically provided a significant inflation hedge, but only in cases of mild inflation. Governments generally tax or seize assets that are performing well to preserve their currency's worth during hyperinflation because a decline in a currency's value puts the government in a vulnerable position and needs to do so to prevent a rebellion. Burry predicts that the dollar would see double-digit inflation rates, which would place the US dollar in a difficult spot. With this in mind, we know that Burry probably doesn't have any commodities or farmland. He tweeted before, saying, "In an inflationary crisis, governments will move to squash competitors in the currency arena." Burry doesn't see the point in taking on the additional risk of taxation or seizure. Burry's next choice is to short stocks. Given that Burry thinks stock prices will crash, it's likely that he's shorting speculative stocks. It would be reasonable to presume that Michael Burry is shorting equities because it is obvious that he believes that stocks will drop sharply in the near future. While having no expiration date, shorting a stock gives you the 100% upside potential. Borrowing shares of a stock and selling them on the open market is known as shorting. The objective for short sellers will then be to repurchase those shares for a cheaper price. Short sellers, therefore, do the opposite, selling stocks and attempting to purchase them back at a lower price, as opposed to buying stocks at a low price and selling them at a high price. If the stock drops to zero, you can profit to a maximum of 100%. Burry is probably shorting stocks himself, as seen by his tirade against anyone who criticized short selling. Although we cannot be certain, there is a strong likelihood that Burry went from purchasing put options to shorting stocks. Michael Burry is bearish on cryptocurrencies due to their speculative nature. Burry has looked into shorting crypto before, but he has decided not to. Burry explained, "I've not been shorting cryptocurrencies at all, and I'm not now. I believe that cryptocurrencies are in a bubble and that most in it do not understand it well. This allows us to rule out shorting crypto as a possibility." The last option for Burry is for him to short bonds. Fortunately for us, Burry posted a tweet that essentially proves that he was shorting bonds. Burry's largest wager is probably to short via 30-year treasury bonds. Bond yields and prices are negatively connected. Therefore, falling bond prices would result from rising bond yields. In general, long-term bonds are more impacted by an increase in interest rates. By shorting 30-year treasury bond yields, Burry is shorting the most volatile bond. Michael Burry is known for taking on unprecedented levels of risk. He literally invented an entirely new security called credit default swaps in 2008. Burry bought put options on a treasury bonds ETF in August 2021 and later sold them. He presumably shifted to credit default swaps and outright shorting since options premiums are pricey. Credit default swaps are similar to purchasing bond insurance. Investors are required to continue paying the monthly insurance fee as long as the bond doesn't default. It also protects the bond's value in the event of default. Credit default swaps are particularly important during a breakdown in the bond market. Just like earthquake insurance when there is an earthquake, during the 2008 recession, Burry made hundreds of millions of dollars by purchasing credit default swaps. Now the government can't bail out corporations as it could in 2008. He thinks he can earn significantly more. This brings us to the possibility of Burry buying credit default swaps and corporate bonds. Corporate bonds tend to carry higher interest rates due to the increased possibility of a default in comparison to the US government. During the 2008 recession, Burry purchased credit default swaps on mortgage-backed securities because he believed that the housing bubble would pop. Now he believes that the traditional financial infrastructure will fall apart. So it wouldn't be far-fetched for him to be shorting banks through credit default swaps. Burry consistently places risky bets and his most recent holdings are no exception. By investing in GameStop before everyone else, he transformed $1.7 million into $270 million. Because of how bizarre and profitable his bets are, the SEC continually looks into him for any wrongdoings. Directors of The Big Short too were keen to hire Burry because he knows his frightening prophecies will come true. He recently made his most daring prediction when the rest of the world is still asleep. After the stunning invasion of a new nation, he now thinks that World War III is likely to break out. Burry claims that a completely new phase of pressure is about to begin and that we are just halfway to the end of the misery. Let me know what you think about how this recession would end. Comment down below. Click the like and subscribe buttons if you enjoy this video. This is your 3 Towers Investing channel. Thank you for watching and I'll see you in the next one.